So in this video, I'm going to be giving my opinion on the decision that popular finance YouTuber MeetKevin made, and that was selling his entire portfolio worth $20 million of both stocks and cryptocurrency. And just before we get into it, if you guys could take a second to show some support and drop a like on this video, it'd be very much appreciated. So if you're not aware, MeetKevin is a YouTuber with around 1.7 million subscribers, and he covers all of things from real estate, stocks and cryptocurrency. He made his start in property, and that's what makes up about 50% of his overall portfolio, or about $20 million. So about $20 million in property, and then about $20 million was split between stocks and cryptocurrency. But he made the decision last week to sell all of his stocks and cryptocurrency completely. And make sure you stay tuned because I'll go over my plans for the stock and cryptocurrency market as well, and some of the current moves that I'm making. So as I mentioned, Kevin pretty much covers off all things to do with the stock market and cryptocurrency market, and generally he shares the same thesis as me in terms of the long-term investments, kind of buying and holding things. But seeing as he does have quite a large portfolio, he uses a section of that for kind of momentum and swing trades, but mainly he preaches all about long-term investing. So this act of completely selling everything was a little bit out of the blue and a bit out of character for what kind of Kevin regularly preaches on his channel, and it did cause quite a bit of stir. To give an idea of what he had in this stock portfolio, it was mainly a lot of high growth tech stocks, so he was fairly concentrated in this one sector, which when you have such a giant portfolio is not really necessary because generally you would try to diversify here a small bit in order to spread your risk. I mean, fair enough if you have a smaller portfolio and you want to put that all into a more concentrated sector such as the high growth tech stocks, and that's where you're hoping you'll get the most gains quickly. But when you have such a large portfolio as around 20 million as Kevin does, then you're definitely taking on some unnecessary risk there, in my opinion anyway. And Kevin is a person who does a lot of research into all sorts of factors that would affect the market, mainly the political side of things, the Fed, Jerome Powell. He's well up to date in all of that stuff, and basically with all his research he decided that from the space of January to March there wasn't going to be any positive catalyst for the stock market or the cryptocurrency market. Not only that, but he also felt that there was many bad catalysts coming, including the inflation rates, that the market would see quite a dip, and essentially he would perform a massive momentum trade where he would sell all of his portfolio and then buy back in on these huge dips, and then obviously hoping to end up with more money than he started with once you consider tax and all that. Now, as he called out himself, it's obviously an incredibly risky thing to do. It's easy to say in theory that you're going to sell now, you're going to wait for the drop, you're going to buy back in, and then hopefully you'll ride that all the way up to the top. But the real hard part is actually timing the buyback in. For example, if you sell all your stocks and then the market drops 20% and you're thinking maybe this is a time to buy back in, or maybe there could be some more pain coming, so you decide to wait, the market may drop another 5% or shoot immediately back up. There's just no way of knowing. That's why they say timing the market is incredibly hard, and that's where the phrase time in the market beats trying to time the market comes from. So already just a couple of days later, Kevin is 45% back reinvested in the stock market. He managed to pick up some Tesla under the 900 mark, which is currently still sitting at. He has a small short position which has worked out quite well over the last number of days here as we continue to see some more pain. That makes up less than 1% of his overall position, and then he's holding about 55% in cash currently. So here's my thoughts on what Kevin has done here. So as I said, it's an incredibly risky thing to do, but you know, if it doesn't work out for Kevin and he ends up losing quite a bit of money or mistiming the dips and just having to buy back in when the market is a little bit higher, it's not going to be the end of the world for Kevin. As I said, he has about $20 million in property as well, so there's quite a bit to fall back on, so he definitely won't be left with nothing. Whereas for the average person who may have maybe 10 or 20,000 invested in the stock market, I wouldn't see this as a good idea. I think you really need to know what you're doing here, and even when you do have all of the information available to you, you still would not be in a position to accurately time the market. Kevin is definitely going to need a bit of luck on his side in order to get back in when the markets are low and avoid things such as a dead cat bounce where, for example, it might dip and then shoot back up and he may get into it while it's on the way back up, but then it could come just down again. But I do think it will work out for him. As I said, he's quite a diligent investor and definitely knows what he's doing. So I mean, the fact that he's even 45% back reinvested into the market is a sign that he's not taking too much risk and completely sitting on the sidelines with all that cash. But he still has quite a large sum available, about 50% or about 10 million in cash right now. And I'm sure he'll take advantage of the dips as they go down. He's not going to try catch the falling knife in terms of he's going to completely hold off and put everything in at once. I'm sure he'll be smart with the way that he buys things back. But I can definitely see why this may have upset some of his viewers. Obviously, Kevin is not a financial advisor and he never tells people what to do with his money. He's just showing what he is doing with his, and he called it out many times. It's risky, he doesn't recommend it, but I can still see why some people may be a bit annoyed because maybe they've been following his style of investing, and then when there's this sudden change in strategy, you could maybe start to doubt the person making the content. But for me, this is where it's important to not just follow somebody without kind of thinking about it yourself. Obviously watch different people, get different parts of their strategies to form your own strategy, but be confident in what you're doing yourself and have a vision outside of other people's vision, where if they do decide to go some drastic route like MeetKevin has done here, that you're not completely worried about your own portfolio. They have enough confidence and enough belief in your own strategy. So MeetKevin is somebody that I do watch regularly and someone that I would generally follow some of the same things that they do. But for me, what I'm doing is completely avoiding this strategy. So for me, it's just a matter of consistently dollar cost averaging into the different stocks that I like in different ETFs. And where I have cash available and I see attractive dips, I will go ahead and add some more cash into the market there. So what I've done is actually taking this opportunity to double down on the stocks that I'm most confident in. And if you guys watch my previous stock portfolio updates, you'll know that that is Tesla and Palantir. So basically, I've decided to sell pretty much everything in my portfolio, bar a couple of €100, and put it just into Tesla and Palantir, with the split being about 95% for Tesla and 5% for Palantir. And then when it comes to cryptocurrency, I've decided to sell out of quite a number of small caps and put it into mainly Bitcoin. So Bitcoin is now my top holding, Bitcoin and Ethereum. With Bitcoin currently trading at about $37,000, I think it's a great opportunity for me to pick up some more. Sure, it might be an idea to look into some more smaller market cap altcoins, but for me, I'm just not sure of the longevity of a lot of them, and obviously Bitcoin is one of the safest choices when it comes to cryptocurrency. So with it being on quite a discount, I thought it was a good place to put my money, which is a little bit, I suppose, risk off compared to a lot of other smaller cap altcoins. But obviously anything in the cryptocurrency space has a big element of risk to it. But what I'll be doing in my next video is actually going over my stock portfolio in more detail, as well as my cryptocurrency portfolio, and I'll talk a bit more in depth about some of the things that I'm investing in there and just kind of my plans going forward. So definitely stay tuned for that video. But anyway, to summarize, while I don't completely agree with what MeetKevin has done in terms of this strategy, because it does carry quite an element of risk to it, I think he's an extremely experienced investor, and I'm sure he will come up good for doing this certain strategy. But for most people, I think personally that it's a good idea to just continue with your own strategy, dollar cost average into the markets. Maybe if you're feeling a bit uncertain, build up a bit more of a cash buffer so you have it on the sidelines in case you do see some attractive dips where you can buy more of your preferred stock. But yeah, if any of you guys watch MeetKevin or want to check it out, I'll leave the link down in the description below to his video where he basically talks about selling everything. For those of you that have seen it already, I'd love to know your opinions in the comments below. Do you think it's a good idea? Do you think it'll work out well for Kevin? And what are some of your strategies for the current stock market and cryptocurrency market right now? I know there's been quite a lot of pain over the last while, but I mean the S&P 500, for example, its average returns are about 8%, and that's including these years where we have some big drops. So generally it always comes up smelling like roses. There'll be bad years, there'll be good years, but overall I think it's important to just continually dollar cost average in, as I've mentioned a couple of times in this video, and let your money just work for you, have the time to work for you. Often a lot of this is kind of short-term noise, and then when you take a step out, zoom out from the chart, you'll see that things will generally continue on the up. But anyway guys, thanks so much for watching this video. If you haven't already, if you could take a second to drop a like on this video, that'd be amazing. And if you're new to the channel, it'd be great if you could subscribe as well. Thanks so much for watching, and I'll catch you in another video.